I already paid my premium. Why am I getting another bill?
Or maybe you're asking the opposite question.
If my business slowed down, shouldn't I get some money back?
This is probably the number one question we get asked after a general liability audit. Today, I'm going to go after why your general liability premium changes after an audit, what the insurance company is actually calculating, and why an audit doesn't automatically mean you owe more money. I'm Ciara Gravier, CEO of the Bunker Insurance and Risk Management. If you find this information useful, don't forget to share, like, and subscribe to our channel. So let's go back to when you first purchased your insurance policy. You gave your insurance agent an estimate of what you thought your gross sales were going to be for the year. Let's assume you estimated that your sales were going to be $1 million. Maybe you estimated that your payroll would be $500,000. Those numbers were just estimates. Once your policy expires, those companies compare those estimates to what actually happened during the policy period. If your business performed different, that's where the premium change comes in. Commercial insurance is very different than your personal insurance. Many general liability policies are rated off of your business's activity. That can include your sales, payroll, subcontractor costs, square footage, units manufactured. The insurance company tries to charge a premium that is proportional to the risk your business carries. If your business grows significantly throughout the policy period, which is that year, then the exposure for the insurance company does as well. The audit is simply updating for the growth that you didn't include in the projection when the policy started. So let's say you're a plumbing contractor here in South Florida. When your policy started, let's say you put down an annual payroll of about $750,000. Your business went better than expected that year, and you actually spent $1.1 million in your payroll costs. From the insurance company's perspective, they insured a larger operation than what was actually reported and originally priced. So it's not a penalty for growing. What it means is, had you originally projected the $1.1 million in payroll, that's what you would have paid the entire policy year. At the Bunker, we encourage our insureds to be moderately conservative, not overly conservative, because then the audit bill ends up being very large. But typically with the excess and surplus market, which is what the majority of the policies are here in South Florida, if you overestimate your sales or your payroll or your costs and you end up doing less, unfortunately, the insurance company will not return the premium. So we want to be moderately conservative. And if you are hoping for a $1 million year, I would do the insurance, for example, around the $700,000-$800,000 for that year, and then check in with your insurance agent throughout the year. If you land a large project and you know you're definitely going to be over the $1 million, that's a conversation to have during the policy year. One of the biggest misconceptions and frustrations I hear from the insured is that the audit increase is caused by the insurance company's rate increase. Most times, the rate doesn't change at all. In fact, it should stay the same or lower a little if the rate increase or your growth was that exponential. Understanding the difference between the rate increase and the exposure increase can save you a lot of headaches. When your audit is complete, don't just look at the amount due. Pause and think, what caused this premium adjustment? Was it higher payroll, increased sales, more subcontractor costs than expected? Is it a different classification? Knowing this reason helps you better prepare for the next audit. I know that audits can be very frustrating, but the audit isn't an insurance company's way of just charging you more. It's about making sure that the premium that you paid actually matches the risk and the exposure that you've been operating during that policy period. The more you understand how your general liability policy is rated, the lower stress the audits become. In my next video, I'm going to explain one of the most unexpected reasons why contractors get audit bills, and it has to do with your subcontractors. If you have any questions about your audit bill, click the link below to schedule some time and we're happy to help. Remember, at the Bunker, we're here to help you move from danger to a safe place.